All right, I think I've started the recording. So let me share my screen. Yesterday, we did an example on capital allowance. We did one example on capital allowance. So confirm if you can see my screen. We did this example. I've corrected the material because yesterday there was an error in the question, and I've corrected it. I've uploaded the corrected version on the drive. So to those who has access, I've put the correct one on the drive. So do you have any question regarding this particular question that we treated yesterday before we move to another question, please? Okay, I guess we are really good.
I don't understand the calculation done because I was unable to join the class.
If you did not join the class, you should have watched the recording. I cannot start from the beginning. You should have watched. That's why we dropped the recording. A lot of people missed the calculation because the class dropped from. Oh yeah, sit down here. The class dropped from 35 people to like around, is it 14 yesterday when we were calculating. So I know that most people were not in class for the calculation. I know, and that's why I had to urge them to drop the recording as soon as possible so people can watch before today's class. All right, so let's continue with the example. I said yesterday that we are going to be doing hire purchase, but we will not start with hire purchase because of those that did not um participate in yesterday's class. I will start with another simple example. Then this one is the most simple example we have here actually. But let's check. Let's do this one. Number 4. I have to laugh. Come on. This number 4 is what's wrong with this material like this? Let me go to the word version. I guess I did not notice yesterday. Okay. Okay, so Nagode Limited, a manufacturer of soaps and detergents, was incorporated on 1st of April 2020, but commenced business on June 1st, 2020, and their year end is 31st of December. So we have their qualifying capital expenditure. We have it here. A motor vehicle assigned to the general manager, which cost 3 million at the date of purchase on July 1st, 2022, was sold for 1.2 million on December 31st, 2024. Prepare capital allowance schedule for Nagode Limited. So if you were not in yesterday's class, I'm treating this example for you. Or none, you are supposed to go to example 1 straight. But I'm treating the example because of people that were not in yesterday's class. Sally, your hand is up.
Okay, ma. Good afternoon, ma'am.
How are you?
Fine, ma. My yesterday class, I didn't finish it with you guys, but I watched it this morning. So after watching it, I understand what you explained, but I thought they said 10% is to be charged on plants and machinery annually. So I want to ask, since they did not charge it, I want to ask whether is wrong information or is correct. I don't know.
10% on plant and machinery for what?
Annually. They said 10% is to be charged on plant and machinery. It's not in the question actually. But the
No, like I understand what you are saying actually, but
oh,
the 10%
okay.
that I know is investment allowance, and it's just once in the first year. And that information has been scrapped by finance at 2023. We no longer have investment allowance, and it's not even every year, it's just 1 year. So maybe you are talking about something else. That's why I'd like you to buttress your points more.
Okay, is what I'm saying that you explained. And secondly, ma, I want to ask something.
Okay.
When you use three, is it because of the where we count from July 1st to November, which is 5 months? That's the reason why you scrap that 1 year and how would I you remove that 1 year and change that 4 year to 3 years.
Yes, we assume that I think 5 months. No, we use 5/12 first. Instead of
Yes.
now counting the 5 months as 5 months, we counted it as a whole year. So we removed a whole year from the useful life and used the remaining years, just 3 years.
Okay. What if it is 3 months that we use? Are we still to remove 1 year?
Yes, yes, because that is why the new way for calculating annual allowance after that particular period is using your tax down value. So there will be no residual amount.
All right. All right. Thank you, ma'am.
You're welcome. Okay. So let's dive into this second example. If you have any question or if you are confused in the first one, try to this second example is a bit tougher than yesterday's one. Just a little bit, not that it's very, very tough. Just a little bit tougher than yesterday's one. So you might want to pay attention. Okay. Ali, I want to put your hands down now. You want to collect sweets? I don't have sweet though.
Sorry, ma'am.
Okay. So we're using what this time around? Ah, what? So we have read the example actually. Let's dive into calculation. Sorry, my okay. So we have Nagode limited. What we want to do is what? Computation of capital allowance for the relevant years of assessment. Right? So now as usual, we'll do our workings by the side. Workings. Mm. Okay. So now the first thing that we did yesterday, looking at your question, you can see that we have year 2020, we have 2020, 2020, 2020, 2020, 2022, 2022, 2024. So definitely these questions covers more than one year of assessment. So the first thing that you want to do when dealing with a capital allowance question is to do what? Compute your year of assessment base period and put the assets that fall under each year of assessment and each base period under them. We want to know which of these assets was gotten in a particular year of assessment or a particular base period. That will be the first thing that you are supposed to do. So now let's dive into it. This company is what? A new business. Remember, we did basis period first. And I explained to you that base period is very, very important. This is one of the reasons why it is very, very important, right? So Let's go back to our Excel. In the chat box, please, before I move to my Excel. Yesterday, only two people could do this thing, and I was very disappointed. But let's try our luck today. In the chat box, everybody give me the first 3 year of assessment and base period of this particular company. The question is on the screen. Check the screen and read the question to yourself, please. The first 3 year of assessment and base period of Nagode Limited in the chat box. The first 3 year of assessment and basis period. I should give baby seats. I would surely drop. I will surely drop the. I'm not the one that is in charge of dropping the recording actually, but the person in charge will work on it. I trust me. He's going to work on it as soon as possible. Baby does not want sweet. Nobody is typing answer. Oh. Let me go back to the question. Maybe you guys need the question. You guys should not disappoint you today. You can't see the question again. Let me show you the question. Oh yeah, this is the question. The first 3 year of assessment and basis period. So if you guys are correct, we'll continue. Because I told you guys when we were doing basis of assessment, the knowledge of basis of assessment is very important. Now, this question, you cannot do it if you don't know your basis period, because that's the first step. That's why I keep saying if you don't understand, let me know. Your class rep has sent me question, but I don't know why I keep forgetting to forward them to you. I will check his DM now and forward them to the group. Go and practice. If you have any question, come to me. I will respond to you. And this particular question I want to treat, I caught it as from company income tax question. So if you don't have knowledge of company income tax, or if you don't have knowledge of capital allowance, you cannot do company income tax. So everything is built upon one particular knowledge or one particular topic. So have we done it? Okay. First, April 20 to 31st of April. Let me check. What is the accounting year end? The accounting year end is that 31st December. Oh. Accounting year end 31st December. Michael, you tried, but you need to try again. It's wrong. Awa, let me see what you have. When did they start business? July 1. Okay. Awa, you did not put year of assessment though. Your base period is correct though. Your base period is very correct. Let me clap for Awa. Let me clap. This clap is only for Awa. The rest of it is not for you. Because you did not do my classwork. Michael, I did not clap for you because you did not get it. You did not get it. Yeah, try again. You seem to have misunderstood the question. Yeah, sit down. Yeah. The company commenced in July and not April. That's why I told you that you should know the difference between incorporation and commencement. The company was
What is the
incorporated
question
in
again?
April. Eh?
The question, I'm just joining. I was having a network issue there.
This is the question. This is the question. Have we seen the question? It's not in word format. I would have copied this to the comment section, but it's not in word format.
Okay, I've seen you. What are we going to do?
I said you should do the first 3 year of assessment and basis period for this company. First three years. Faith did not complete it. So I was explaining to Michael, the for a new business that just commenced operation, remember the law. From the date of commencement to the end of what? The first accounting period.
Ma, please go back to the question.
Are we good? Okay, let's continue. Seems those that want to try have tried. Don't want to waste our time. Okay. But please, if you have any question on basis of assessments, let me know. I beg you, in the name of God. Okay. So now, for our workings, we need our year of assessment, basis, period, our what assets. In this place, we are not using accessible profit. We are using what assets, because what we want to know is the year in which a particular asset falls, right? So now, this company is a new what? A new business. And when did the company commence? 1st of July 2020. And the rule for a new business says what? From the date of commencement, 1st of July 2020, to the end of the first accounting period. When is their accounting year end? Where is it in self? The accounting year end is what? December 31st of every year. The accounting year end is December 31st of every year. So it means that this first one will end when? 31st December, the same year, because we still have December in 2020. So definitely it's 2020 December that we're going to use. Now, the next thing, what is now the year of assessment? Remember, we are working with preceding year basis. So our year of assessment is going to be 2021. Now, back to the asset that we got for this particular what? The year of assessment. You now go back to your question. Which of these assets did you buy between July to December 2020? Now, let's check them one after the other. This one, industrial building, we bought it in May. In May, as the company started operation, guys,
No.
as the company started operation in
No.
May, we
No.
have
No.
not
No.
May.
Plan.
June 6, June 16, have they started operation?
No.
No.
No. So now the rule says
No.
that any asset that the company gets before it commence business will be deemed to have been gotten on the date they commence business. Let me repeat myself. Any asset that a business has gotten before they commence business will be deemed to have been gotten on the day they commenced business, which means all of the assets that they got before they start operation in July 1st, 2020 will be deemed to have been gotten on July 1st, 2020. Did we get that?
Yes,
So
ma'am.
it means that according to this our question now, industrial building, non-industrial building, furnitures and fittings, industrial plant, motor vehicle, I think that's 5. The 5 of them was gotten in this particular what basis period or year of assessment. So can somebody call it for me? I think industrial building, Abi.
Yes. Industry.
Industrial building, furniture
Industrial
and fitting,
building,
motor vehicle.
non-industrial building, Abi. Non-industrial
Ma, go back to
building,
it and screenshot it then.
Furniture and fitting.
Okay.
furniture and
Fitting,
fittings,
industrial plant,
furniture. Let me put F and F for furniture and fitting. F and F,
industrial
industrial plants
motor vehicle.
and motor vehicle. Okay, so it means for, let me shift this here.
Sorry to draw you back, Ma. Please, can you repeat that statement you said on any assets gotten before the commencement date of the business will
Yeah,
be
any
deemed.
assets gotten before the commencement date of the business will be deemed to have been gotten on the date that the business commenced. It will be deemed to have been gotten on the date the business commenced.
Thank you, Ma.
You're welcome. So now we have gotten all the assets that we bought in this particular year of assessment. We move to the following year. 2022 year of assessment will be from what? 1st of January, which is the second day after the last accounting year end, 2021, to 31st December 2021. Now let's go back to our question. Before we even talk about that particular year end, see this question. We have two motor vehicles and the date is July 1, July 1. If you are not careful, you will pick the two motor vehicle for 2020, which means that when you want to do tax, especially calculation, I beg you in the name of God, just calm down. It's normal for you to be scared in the exam. Or you are going to be very scared. You are not sure if you can do it, and the question might look plenty and hard, but I tell you, taxation is not hard. Karamon ni tax ni karamon. It looks like a person that is big and scary, but it's so soft on the inside. That's taxation for you. So you need to calm down and check well. A simple question will have trap. A question that look hard is actually very simple. That's just that. If it's very simple, like this question, simple, just calm down and check for trap. It will have trap. But if it look very hard, I bet you calm down and check it well. It's simple. They just intentionally want it to look hard, right? So now this question is quite simple, but look at the chart that they put there for you. 2020 and 2022. Even when I was solving this question personally, preparing for this class, I fell into the trap before I check it well and say, oh my God, I've made a mistake. So it's very easy. You have to be what? You have to be very, very careful. So now we have stopped at 2020. Did they buy any assets between January to December 2021? I don't think so. They did not buy any assets within that period. So this one is going to be what? Nil. Nil. Okay. So the following period, 1st of January 2022 to 31st December 2022. Let's go and check. Did they buy anything? Yes. Abi?
Yes.
They bought motor vehicles and furnitures and fittings within that period. Motor vehicle, F and F. F and F is furniture and fitting. 2024, 1st of January 2023 to it's called tomorrow. Sorry. That was not intentional. To 31st December 2023. So did they buy anything? No, I don't think so. They did not buy anything in 2023 as well. Those that were in class yesterday, can you see that this one is a bit different from what we did yesterday? It's just a little bit different actually. So 2025, 1st of January 2024 to 31st December 2024. Did they buy anything? Yes. Industrial plant. Industrial. Let me write this info. All right. So this is our what? Schedule. Now we can tell which asset was bought in what period. Please, do we have any question? Any question?
Please, ma, just a little bit recap from the beginning. My
On the
network
what?
was keeping the first arrangement of the working.
This
Sorry,
is
ma, for drawing you
a
back.
schedule. It's okay. This is a schedule to know when did we buy what assets. So before you can even compute your capital allowance, you need to know when you bought each of your assets, which basis period and which year of assessment did you buy your asset. And that is what this schedule is for. This schedule is for knowing your basis period. So you are going to follow the commencement rule. Why? The company is a business that just commenced. Please don't make the mistake of using commencement rule for all of your questions. You need to read it well. This question says what? The company had just started. I think, let me check other questions. See, let me see. This one is a company that sees business now. This one is cessation. This one too is commencement. Why did I put plenty commencement like this? Okay. This
But
one,
now, if the business, if it's a question that does not have commencement date, which date are we going to?
they are going to use normal PYB. It's going to be like from year 2, the way we are using accounting date, beginning accounting date to the end of the accounting end. Do you get?
Yeah.
It's going to be normal PYB because we will
Okay.
not be following date of commencement again.
Okay.
So that's how it's going to be. But they will say it in the question that it is an existing business. It will be
Okay.
stated in the question that it is an existing business. So
Oh,
you just need to follow the rule. This question relates to commencement. That's why you follow commencement rule. And what
okay.
you need to do is to what? Write down your year of assessment and your basis period. Then as you're writing each year of assessment and basis period, input the assets that fall into this particular date from this date to this date. How many assets did they buy? Write it there. Go to the next one. What is the next what is the next basis period and year of assessment? Which assets did they buy? Input it there. Here they did not buy anything. Go to the next date. Which one did they buy? Until you reach the place that all assets have been exhausted. All the assets that they have been exhausted, like we did here. I hope we are good. So now let's move. So we have year of assessment. Year of assessment. We have industrial building. Non. Let me just put non-industrial building, furniture and fitting, F and F, industrial plants, motor, I think, motor. So I think that's all now. We don't have any new assets. Then we have total. To bring our workings closer, let's delete some columns so that our workings will fall into the same view. Okay. So the next thing to do, we want to bring forth what? Our percentages. Initial allowance percentage is going to be in percentage. Annual allowance percentage. So for industrial buildings, 15-20. Only 15-20, 15-10. 10. Same thing with non-industrial building, 10%. For furniture and 15, we have 25-20. Industrial plants, we have 50-25, if I get it right. For motor, we have 50-25. So now, for those who don't know how to check this thing, let me go and show you. Go back to the material. Let me go to the PDF. So, as I said before, here it is, capital allowance rate. This is your initial allowance, your annual allowance. It's going to be provided for you in the exam hall. It's going to be provided for you in the exam hall. So you don't have to cram it. But usually, by the time you start solving question, it will stick to your brain actually. You just know it's like, you will know it automatically actually. So let's put our Naira sign. Naira sign. Yesterday we did not put Naira sign. I remembered after we finished class. Naira sign, Naira sign, Naira sign, Naira sign. Let me see the figures. Are they big figures? They're not. Oh, they are big figures. So let's. Oh, what's it called? Do it in thousands. So this means that our answer will be removing 3 zeros. So the stuff is a million, but since we have put 3 zeros on top, we are going to be writing in thousands. I'm trying to make my Excel workbook look like a normal note, like how I would solve it on a normal sheet of paper. That's why I'm doing all of this stuff. I want you to look exactly like it will look on your white paper. All right. So now we start from the first year of assessment, which is what? 2021 year of assessment. How many assets did we buy? We start with the cost of those assets. The cost. Industrial building. How much did they buy the industrial building? 15,000. 15,000 naira. Let me For all of these, let's put it in. Okay. How much did they buy the non-industrial building? 8,000. Furniture and fitting, 2,400. Industrial plant, 12,000. Motor, 7,500. 7,500. So that's for the cost. After you have put in the cost, then the next thing is what? Initial allowance. Initial allowance. I'll not write it full because of space. So for initial allowance, you follow the percentage. No, you follow the percentage. And for industrial building, what is the, let me do workings here. 2021 year of assessment. Industrial, I don't think there's something big in initial allowance. We do workings for annual allowance. So all you need to do is 15% of 15,000. Let's bring out our calculator. 15% of 15,000, 2,250. Remember, we need to know the number of months in this basis period, but we don't prorate initial allowance. No matter the number of months, we don't prorate initial allowance, don't forget. So now, in this first year of assessment, how many months do we have? July to December is how many months? Oh yeah, oh,
6 months.
6 months.
6 months.
But the remaining will be what? 12 months, right?
Yes.
This is important. No, I forgot when I finished writing the thing. It's not compulsory that you write it in your stuff, but please, but if you have to write it because you need to know whether you are operating your annual allowance or not, and this will help you to, it will put it at the back of your mind. So let's go back to our initial allowance. For non-industrial building, I can use this thing as calculator self. Equal to 15% of what? 8,000 naira. This one is 25%, equals to 25% of 2,400. This one is also 25%, 25% of how much? 12,000. And this one is equal to 50%
Sorry,
of
ma. The other
7,500.
one is 50. Industrial plants.
Yes. How many
It
did I
is
use?
50.
Oh, sorry. Thank you. Okay. Thank you. So we have to add it up. And don't forget, these ones should be in bracket too, because we are going to be minusing it. We'll minus it from what is on top. So now what we do here, we are supposed to add it all up. We'll add it up. All right. So in your notes, don't put bracket in this total. The total is not supposed to be in bracket, but because everything we added up is in negative form, that's why it gave us a total in negative form. Are we good? So that is it for initial allowance. It's simple. Now annual allowance. Annual allowance. Remember, formula for annual allowance is, let me write it here. Annual allowance equals to what? Open bracket, cost minus initial
Allowance.
allowance multiplied by what? Annual allowance percentage.
Allowance.
Abi,
Yes, ma'am.
we can do it that way. So if we take it one after the other, industrial building, For industrial building, what do we have? The annual allowance will be equal to, the cost is how much? 15,000. Let me put it so. 15,000 minus 2250 multiplied by, what is the annual allowance percentage? 10%. Abi? And it will give us how much? Let me
1,275 naira.
1,275 naira. On norms, this is going to be for what? Let me move this one here.
12 months.
But because this is for 12 months, we now have to do it by what? Multiplying this multiplied by 3/12. Oh, sorry, 6/12. And what would this give us?
That is 637.5.
That is 638. Let's round it up. So
Okay.
because it's for 6 months, it's going to be for this. So now what we do here is to bring our value in negative form to that particular cell. So that's annual allowance for industrial building. Non-industrial building, we are going to follow the same thing. 8,000 minus 1,200 multiplied by 10%. So what do we have?
680.
100 and
680.
680. Yes, that. 680 multiplied by 6/12. That would be like divided into half.
340.
What is it? Sorry, please give me like 10 minutes.
Click on the question before you go.
All right, I'm back. Somebody wanted to ask a question. Akini, kindly mute your mic. So it seems the person is no longer on the call. I don't know what happened. Kindly, let's continue what we were computing. So, non-industrial plants, we've gotten our answer. Okay. Remain furniture and fitting, F and F. So F and F will be equals to the cost 2,400 minus 600 naira multiplied by 20%. So what do we have? What do we have, guys?
$180 as final answer.
Eh?
I said final answer is 180.
Oh,
Oh,
thank you.
thank you.
360 multiplied by, I'm writing it because of those that would watch the recording. Some people are relying on the recording and we don't want them to start looking for where we get figures. And others that will come back to this workbook and try to see what you have done. Maybe they got confused at some point. It's going to be easy for them to know where we got a particular figure. Okay, so industrial plants. Industrial plants is going to be, cost is 12,000 minus 6,000 multiplied by how many percent? 25%. So here, what do we have?
1,500.
Eh?
1,500.
1,500. That'll be 1,500 multiplied by 6/12. which is that not 750?
It's 750.
Thank you. So here is going to be equals to 750. Then the last one, motto. So motto 7,500 minus 3,750 multiplied by 25%. What do we have?
Uh, 937.5, which is 938.
All right. Multiplied by 6/12. So that would be
468.75, which is 469.
all right. Thank you. So we write it here. Then what do? We add it all up. Okay. So no other allowance, then we had these two together. This is what we are looking for. This is the what? Total capital allowance for 2021 year of assessment. As long as there is no, what's it called? There's no sales of asset. I think they sold an asset. Let me go and check it. In a particular year. Let me check the question. Okay, it's 2020. Choose asset that they sold in 2024. So we have not gotten there. So now tax written down value carried down. Then what is our tax written down value? I've explained that it's like what? It's like carrying amount. Tax written down value is like carrying amount. So all you need to do is what? Just come here and just add up. Remove all these ones. Remove them. Then you get your tax written down value. Please, are we good? Any question? Before we move to the next year of assessment, any question? Thank you, Timidate. So I believe. Yeah, come. They're disturbing the class. So that. Okay. Thank you. All right. So sorry for that. My baby too is learning taxation. Okay. So no question, I guess. Now let's move to year two. Year two, we don't have any new asset now. 2022 new. Okay. So that means we are just going to be filing for those that we have in existence. But before we move ahead, for each asset, let us check the economic useful life. Economic useful life. Remember, economic useful life equals to 100% divided by what? 100% divided by the annual allowance percentage. So we are going to follow this formula. For industrial building, 100% divided by what is the annual allowance percentage for industrial building? 10% divided by 10%.
10%.
And that means building has how many years?
It's 10 years. 10 years.
All right. So the same thing for this. In non-industrial building, I think it's the same thing now. It's the same number of, imagine. So, but for furniture and fitting is how many
It's 5
years?
years.
How many percentage?
5 years. 20%.
20%. All right. So that'll be 5 years.
Sorry, ma'am, my network. Please, what is EUL?
Economic useful life. It's like the useful life of the asset. Do you get?
Thank you.
Economic useful life.
Thank you, ma.
You're welcome. Okay. So for industrial plant is 25%, and it's going to give us 4 years. Same thing with motor. Please, do we understand how we got these years? I'm intentionally writing these things out, oh, so it's going to be easy for us to grab, and you'll not be asking me where I got a particular figure or a particular stuff. Oh. Okay. So now that we don't have any new assets in this one, what we are going to be having is just the annual allowance, which is why we have computed our economic useful life. Because for the 2022 year of assessment, 2022 year of assessment, for the 2022 year of assessment, we um we are going to be computing our annual allowance using the second annual allowance formula. Is it second or third? I cannot even remember. I think it's the third. So for industrial building, the let me write the formula out so we'll not look for confused. So annual allowance in this year is going to be equal to tax written down value divided by the remaining economic useful life. So that is what we are going to be following now. Let me I'm coming. I'm trying to I want to freeze the pen. So we'll not be looking for which one are we. Okay. Mhm. So for tax down value for hold that even if we freeze pen sef, we cannot still see it. We still have to be coming up and down. Let's unfreeze. Okay. We have 12,112 is the tax down value, right? Annual allowance equals to 12,112 divided by now this remaining economic useful life. We are going to be counting 2021 year of assessment as a whole year. You know that it's 12 is when you say 12 months, it is 6 months. 2021 year of assessment contains 6 months, but we are going to be counting it as a whole year. We are going to be counting it as a whole year. So instead of writing, instead of removing 6 months now, we are going to be removing a whole year. So for industrial BD, it's going to be divided by 10 minus 1. Please, I hope we got it. It's like we're saying divided by 9. So it means 12,112 divided by 9. So we have 1346. 1346. 1346. Please, do we get it?
Sorry, ma, I did not get it. Please.
So what we are saying is that
No, ma.
we are following this formula. Annual allowance equals to tax written down value divided by the remaining economic useful life.
Hello, please, is it my network?
It's not your network.
I'm sorry, it's not your network. And wow, I had to attend to something, so it will not disrupt our class.
Okay, ma.
Okay, so I'm sorry. I was trying to be explain this annual allowance because we are no longer in the first year. And if you notice, normally this annual allowance is supposed to be what we are going to be using: 1275, 680, 360, 15. Do you get? But because we have prorated the first one, if you continue using this figure, we'll have like a particular balance, like for 6 months. By the time the number of years end, we'll have it there, and we don't want to have it because the only thing that's supposed to be left, if the number of this number of years have elapsed, it's supposed to be 10 naira. You leave 10 naira. 10 naira is the only thing that is supposed to be there. So now, to avoid us having a particular amount after the end of the useful life, what we'll now do is to take this balance, the tax hidden value, and divide it by the remaining useful life. So as you can see now, instead of this one, where is it, 1275, the amount has increased. It's going to prorate that remaining 6 months over the number of useful life that remains, and you will not have any issue at the end of the economic useful life. Please, did we get it?
No, ma.
Okay, so this is what I'm trying to say.
Hmm.
The annual allowance formula for the second year has changed, and the reason is mostly because our first year sometimes can be lesser than 12 months. And because the first year is lesser than 12 months, it's going to give us residual amount. It's going to give us residual amount after the end of the useful life. It's going to give us residual amount after the end of the useful life, and we don't want that. What I mean by residual amount is that after, like for example, motto now, after 4 years, we might end up having this 638, because in the first year, instead of using for the whole year, we use for 6 months. I don't know if you guys get it. We'll end up having the remaining balance that we did not use in this first year. And to avoid that, we'll now what? We'll ration the remaining amount over the remaining useful life. So that at the end of year 4, we'll not have any money. Everything will finish except the 10 naira that is mandatory for us to remain. Do we get it now?
Yes, ma. Thank you, ma.
All right, you are welcome. So that is why we are using this new one. And then annual allowance for second year will be equals to this one. So for the second one, non-industrial building. Non-industrial building. This thing sef, karamo too much. Okay, we'll follow the same thing. 6460 divided by 10 minus 1. That will be 9 years, right? Let me put years because I know it will still confuse some people. Yes. Okay. Okay, so what do we have? 6460 divided by 9. 6460 divided by 9. Let me calculate it. You guys are taking time. 6460 divided by 9.
717.77.
Yeah, you can round up 718. So you come here and you write your 718. Okay, for the next one, we have furnitures and fitting. Furnitures and fitting. So that would be 1620 divided by how many years? 5 years minus 1 year.
Ma, where
Yeah.
are you getting those numbers? 1620 zeros.
This is the tax down value now. We are following the formula. This is our tax down value, and that's where we are picking the figure. This is the formula that we are following. Annual allowance
Okay.
equals to tax down value. So this is our
Okay.
tax down value here.
Thank you.
Economics is like we have calculated them. Remaining means you remove the years, number of years that have gone. Just 1 year has gone, right? That's why we are removing just one.
Okay. Thank you.
You're welcome. Okay. So what is the answer for this one? 1620 divided by 4.
405.
405.
405.
Okay. 105. This is 105. This thing is going down.
405.
Okay, thank you. 105. So for which one next? Plants. Industrial plants. So for industrial plants, what is the tax down value? 5250.
Ma,
525.
sorry. This is 405.
Which one?
And the furniture fittings.
405.
Yes.
But everybody was calling 105. Am I the one
It's
that had the wrong?
405. 405.
405.
Sorry, it will automatically reflect there. Actually. That's why I linked it. Thank you. So industrial plant is how many years? 4 years. It's going to be what? 4. No, 5250. 5250 divided by 4 minus 1 year. So that'll be 5250 divided by 3. What do we have?
1750.
1750. So let's go and link it. Equals to minus. So the last one, motto. We have, what is that down value? 3281. 3281 divided by how many years does motto have? 4. 4 minus 1 year. So what do we have? That will be divided by 3.
1094.
094.
So now let's go and link for motto equals to this one. And that's it for the second year of assessment. Add it up. Let me leave space so that everything will not look jumbled together. Okay, let me move this one up. Okay, so for 2022 year of assessment, our total capital allowance is going to be. This is our figure. Okay, do we get it? Let me bold in it. Are we good? Any question? I'm assuming no question. Let's move to the next year. Now let's go back to our table. 2023, do we have new assets? Yes. We have new assets. Now, for 2023, because we have new assets, we are going to be starting with costs, right? So what are the new assets? Furniture and fittings and motto. Let's go back to our question. Furniture and fittings and motto. Furniture and fittings 600, motto 6,000. Furniture and fittings 600, motto 6,000. because we have cost.
Excuse
This
me, ma'am.
one, yes,
Please, are we not going to subtract the annual allowance from the tax written down value to get the new tax written down value?
we are kuku supposed to. I'm sorry, I forgot. So let's copy this. Thank you for the observation. Mo ti gbàgbé.
You're welcome, ma'am.
Okay. So now what you need to do is sum it up. This one, just put it across board. So we have our new tax written down value. Okay. So initial allowance. No for this one, because of course we don't have new assets. This one 0. This one we have new assets. So what's it going to be? The initial allowance percentage is 25%. 25% multiplied by how much? 600 naira, because that's the cost of the assets. So that's initial allowance for F and F. But for motor, initial allowance percentage is how many percent? 50%. So we have 50% multiplied by 6,000, 3,000 naira. So annual allowance now, what I used to do whenever we have new asset like this is to have annual allowance new, annual allowance old, because it can get very confusing. So let's go with annual allowance old first. That means we are going to be writing the allowance for our assets that we had before we got new ones. And you know, the funny thing is that it's going to be the same thing. So let's copy and paste. Sorry, paste as values. Okay. This one's supposed to be bracket though. I'll explain the one that I just copy and paste now. I know it will confuse some people, so we don't want to confuse, right? So what I did here is, because even if you compute it, let's try to compute 2 of it. For industrial building, annual allowance for this particular year 2023 is going to be tax written down value, which is this value, abi? That will be tax written down value 10,766 divided by 2 years have gone, right? 10 minus 2 years. And we are going to have how much? Is anybody there?
Yes, ma'am.
That's 1,346. And you see it's the same thing. Do you get? So instead of computing it all over again, knowing you will get the same amount, just keep repeating the same amount for the old annual allowance until the number of years are finished. Please, do we get it? Hope I did not confuse anybody. So
Excuse me.
now, what is it?
Ma will beat your baby, oh.
Sorry. Yeah.
The 2 years is coming from where, please?
The 2 years are the years that have passed, 2021 and 2022.
Okay, thank you.
Sorry, please, so give me just a couple of minutes. All right, sorry, I'm back. So yeah, the person that asked the question, do you get it now? To get your
Ma,
remaining useful life. Eh?
yes.
All
Yes,
right,
I've
right, that's
gotten it.
good.
Thank you.
So now new. For this new annual allowance, we focus on the assets that we just bought new ones, which is what? F and F. So what we'll now do, I don't think I need to write it out again now. With this calculation, anybody should be able to. So let's just write it straight. We have 600, which is the cost of the new asset, minus 150, which is what? Initial allowance, multiplied by annual allowance percentage is what? 20%. Are we good? Then we have our 90. It's a whole year. This particular year is a whole year. So we don't need to prorate. We don't need to prorate. There is no new asset for this. This one also have new assets, and it's going to be minus the cost, 6,000 minus initial allowance multiplied by annual allowance percentage. Please, do we get it? Any question? Please, all these things that I'm doing are things you are expected to do in your note. Oh. They are the things that are supposed to be seen in your notes, exactly how it's supposed to be seen in your notes. So I expect that your notes too will be like this. So our tax written down value now is going to be this. Please, are we good?
Please, ma,
2024
could you
year of
place the
assessment.
further on the new
Which one? On the what?
on the
This one?
annual the new one? Let me see what you divide it with.
Okay.
The
This
new.
one
Yes.
is the same thing as the one that we did in 2021.
Okay, okay, okay.
That's why I did not bother
Thank
to write it out.
okay, thank you.
You're welcome. But in this case, we did not prorate because the number of months is up to 12 months. So we don't need to prorate. Okay. So for 2024, did we buy
Sorry,
new
why?
assets?
Sorry, apologies for the
Okay.
interruption. Why is the number of months still up to 12 months? I
It's
think that
12
one was
months.
14.
The only month that is not up to 12 months is the first year, which is 2021. Every other year of assessment is 12 months.
Okay, and that does not affect whether the asset is bought maybe in the middle of
No,
the
no,
year.
no, no. What we are
That's
checking is the basis period and not the date that you bought the assets.
of course. Okay.
So
So the
what
second
concerns
question.
us is the basis period.
Oh, thank you. Second question is, why are we using the same value that we used in 2022 annual allowance again for 2023?
Because if you compute it again, that's what you will get.
Please, can you complete one?
Well,
So,
I actually did. Maybe you were not paying attention, but I'll do it again, Sha. So now let's take industrial building, Abi. Industrial building, or let's take non-industrial building as example. So for non-industrial building, the annual allowance for 2023 is going to be this tax written down value divided by the remaining useful life. So the tax written down value, oh, let me hear what you. Tax written down value is 5742. 5742. And the remaining economic useful life, we have 2021 and 2022 gone. So that will be 10 years minus 2 years. So what do we have now? That would be 5742 divided by 8 years. So that would be 718 approximately. 718.
Yes.
And what do we have there? Do you get it now?
Yeah, I got it. Thank
It's
you.
going to give you the same answer. So instead of stopping yourself and computing, remember that you are working with time. Oh. The time that they give you will hardly be enough. So if you are not wise with your time, you will not finish. And it will pay you if you know it and you are unable to do it. That's one of the worst feeling in the exam. When you know what you want to do, but there's no time to now do it. But then in your own case, what do you want to write? If you need advanced that and one question, question number one is like 5 pages. That's when you start sweating. You start sweating inside AC. But then don't worry, Sha. We're going to kill everything. Okay. So we have 2024 year of assessment. There is no new asset, but it's a very important information for 2024. Let's go back to our question. He says that a motor vehicle assigned to the general manager that cost 3 million at the date of purchase on July 1st, 2020, which is this one, the one that we did in 2023, was sold for 1.2 million on December 31st, 2024. So I think, okay, this is not even 2024. It's 2025 year of assessment. It's not 2024. It's under the next one, not this one. So we can still hold on to the next one. So now we've got no new addition. It's very simple for us. There's no cost, there's no initial allowance. But what we have is what? We have these two. So you copy and come and paste. This one is going to be the same. Let me just copy. So that annual allowance old, you guys should already understand why it's the same. You guys should already understand why it's the same. Oh, but the annual allowance new is just the same reason. It's the same reason because if you compute it again, that's what it's going to give you. All you need to do is your tax free down value by the remaining economic useful life. Come on. And you have the same value. Are you speaking Chinese? Okay. So tax free down value. Carry it down. Can you see that the money keeps reducing? Tax free down value keeps reducing. In this case, this is what? Industrial plants. How many years do we have for industrial plants? Where is it? 4 years. 4 years. 1, 2, 3. Wow. So for industrial plants that the number of years have expired, there's a rule. Oh. So now, please, I hope everybody is listening. In this particular one, this is the last number of years. So we're not going to write all of this. We are going to remove 10 naira. And this is where the trick is. Remember that you have done thousands. You are writing in thousand. The original figure is a million figure. So when you remove 10 naira from 1,750,000, it's not 1,040,000. That is one of the issues that we usually have. So it's going to be 1,449.99. This one is approximating for me. Who begged the thing to approximate for me? Bye. This is what I want. This one too. Because the 10 naira must show. That 10 naira that you put down must show. Please, I hope we got that one. Until you now sell that industrial plant, you keep carrying forward this 10 naira. You carry it forward, the 10 naira. Please, did we get it?
Ma, please. Okay, you remove 10 naira from the annual allowance.
Yes. It's the rule that 10 naira per asset. Shebi is only one industrial plant that they bought. How many did they buy? It's just one. So assuming like these ones that they have two, assuming in this non-industrial building that they have two, that would be 10 naira times two. Furniture and food that they have 10 naira times 10, 100 naira. Do you get? That's how you are going to be doing the 10 naira. I think
Okay,
some people are reading up.
that's the rule. It's not that it's in the question.
It's not in the question, that's the rule. Temitope, you can speak.
Yes, the rule of the camera, is it applicable to all the classes of assets?
Is every class that is applicable to. I don't think there's a particular class that we don't use to remain 10 naira for.
Okay.
Yeah. Oh, wow.
So please, man, the 10 naira will be removed once the year of the asset is exhausted.
Yes.
Okay.
Oh, wow, you can speak.
Ma, please, I don't understand the rule of the 10 naira. I don't understand.
So what the 10 naira is all about is that by the time the end of the I have to like sit down, please. By the time the end of the useful life of the asset, if the end of the useful life of the asset have come, right? For example, that industrial plant that is 4 years, and we already have 4 years at the end. You're not going to remove all of the annual allowance. You are going to remain 10 naira, and you keep carrying forward the 10 naira until you sell the assets. So the 10 naira is like telling us that the asset is still in the business, so they are still using it to just that the useful life have expired. Do you get?
Yes, have we now removed the 10 naira now like this?
Yes, let me go back to the Excel. So now look at this place. That's why I made this one a decimal. The reason why the 10 naira is like this is because this thing is a million. Remember that we have put 1,000 on top. We are supposed to be writing in million, but because we have put 1,000 on top, we are writing in thousand. Don't make the mistake of going and remove. If we had written 1,740,000, it means that we removed 1,000 and not 10 naira. Do you get? So if you know that you are not writing your figures in full, use your calculator to remove your 10 naira. Don't use your edge, please. Use calculator to remove write the figure in full, your calculator, and remove 10 naira. I don't let me illustrate what I'm trying to explain to you guys. You know, not because we have hidden thousand, we are supposed to write a million, but we have hidden thousand. We have 11750. If you now go and remove 10 naira straight, this is what you have, and this is wrong because the full figure is 1750123. Do you get? So if you remove it like that, it's even 10,000 that you're even removing, not how do I say it? So if you now remove 10 naira using your calculator, this is what you have, which is what we have here. Please, do we get it?
Yes, ma'am.
Hope it did not confuse anybody. Okay. So now let's continue. Only one example. I want to finish time. And I want you guys to do small class work. Okay. Shut up. So in 2022 year of assessment, oh my God, we have new assets, right? Industrial plants. Oh. Industrial plant is number what? That's the fourth one. So not this, not sorry, is this one. How much did they buy the industrial plant? 18,000. 18,000 naira. 18,000 naira. Did not buy motor. But remember that they sold motor. It is in this one that they sold the motor car. But the year Otita, right? They sold the car in this year. So initial allowance for the new plant, how much is the initial allowance percentage? 50%. So I think we can write this to 18,000 minus, sorry, I don't need to put brackets actually. Multiplied by 50%. Let's put our minus there. Minus. Okay. So we have annual allowance owed. Copy. Paste. Copy. Paste. So now this one is going to be child, because remember that it has finished. Abi? So any other thing? Look at the furniture and fittings, motor vehicle. No. Oh, this is not the only asset that has finished in this place. So see, motor vehicle is also 25, which means that motor vehicle is supposed to finish. Let me look at so this old, it means that in this place we are supposed to have 3.99. Go back here, give me the figure. Give me the figure. Please, I hope I did not confuse anybody. Did I confuse anybody? Okay, I guess I everybody got what I did. Those motor vehicles, their useful life has also expired. That's why we went back to remove 10 naira. I did not notice before, but it's also 4 years, so it expired together with. So it means that this one is not supposed to be there. So good. Okay. So now, so I'm trying to look at this. So 1, 2, 3. This is the last year. Okay. Okay, so annual allowance new. For this one 0, this one 0. We have for this one, don't forget. Copy and you paste. This one too. Okay, we have for this too. So equals to the cost, which is 18,000 minus initial allowance multiplied by the annual allowance percentage. How much? 25%. 25%. So let's put our minus in front to make it negative. And for this one, we still have our what? 750. I hope I did not confuse anybody. I hope I did not confuse anybody. Awa, your hand is up. Awa, you can speak.
Ma, please, can you go back to the solution?
Okay.
Ma, this initial allowance for the one we are calculating, for the assets we are calculating for now, the old The old initial allowance is not there.
We cannot put initial allowance for old assets.
Okay.
We
What
cannot put
about
it for
the
old
assets
assets.
that follow the other? What's even the name of the asset? Sef? What about motor vehicle?
The one that we
It's not.
sold.
Okay.
Is it the one that we sold that we're asking about?
This 2025 that we are computing, the old initial allowance for motor vehicle is not there.
It's not there because it has finished. That's what I adjusted here.
How do we know whether it has finished or not?
The number of years. Plant
Okay,
is
okay,
4
okay.
years.
Yes,
Motor
I
vehicle is
understand.
4 years.
Yes, I understand.
You understand now?
Yes.
So,
All right.
what about the one sold?
The what?
The one that was sold in the question.
Oh, we are going to do it after this. Come on. We are going to do it after this one.
Okay.
So, the last kini is December 25. I guess this is the last one that we are computing. Then we are going to compute our balancing charge or balancing allowance. Please, I hope you guys are following me. I know some people are already dropping off the call again. I don't know what. I don't know why people are. Is it that you guys are always tired of my class, or you guys are confused? That you guys are always running away? This one. All right, so this is where we are going to be closing our account because this is where the requirements stop. So you close your save. So now the last requirement is now. This is not the question. The vehicle that was sold. We can do this thing in 2 ways, but I'll teach you just one because second way is going to be a bit stressful. The vehicle that was sold was purchased 2022, which means that in 2022 they bought how many vehicles? 2. Out of the 2, they sold 1. How did I know that is 1 that they sold? They said a motor vehicle, just 1, a motor vehicle assigned to the general manager. Abi? So the 2 motor vehicles cost 6 million. 1 cost 3 million, right? And they said they sold it December 31st, 2024, which is the 2025 year of assessment. Now let's calculate it because we need to know whether it's balancing charge or balancing allowance. We want to know the tax written down value of the sold motor vehicle. Am I writing rubbish? Okay. How do we do it? All you need to do is prorate. How much did they buy the car that they sold? They bought the car 3 million. Abi, how much did they buy the 2 car? 6 million. Sorry, me 10. Let me put. So now multiply by. Multiply by. Okay, I think I got it. Multiply by the tax written down value that we have, which is 7 it's supposed to be 750. It's because of this approximation that affected it. So let's use 750. I believe we use 749 because now people will start asking me where I got the figure from. Equal to, let's use our calculator. It's 3 divided by 6 multiplied by 749. 374 500. 374 500. This is the tax written down value of the motor vehicle that they sold. Is equal to J. Please, did we get how I got the tax written down value? Ladies and gentlemen.
No, I didn't get it.
No, ma.
You did not get it. Yeah, let's go back. One way of getting your tax written down value when you sell your assets is by prorating the total tax written down value by the total number of assets bought. If we go back to the question, they told us when the date that they bought the assets, which is July 1, 2022. This date. And this date, how many assets did they buy? They bought 2 motor vehicles. Right? This one said that they bought. Oh my god, we already made a mistake in our computation. This one that we remove 10 naira, it's supposed to be 30 naira that we are going to remove. 30 naira, that would be 7. 7. 30 naira. Why? It's 3 that they bought. To this one is 3, so 10 naira times 3 motor vehicle, that's 30 naira. So back to the one that they sold. They bought 2 van and 2 motor vehicle in 2022. Out of the 2 in 2024, they sold 1. They sold 1 in 2024. It means that this tax written down value that is here is for 2 motor vehicle. How do we now know the one that relate to the one that was sold? All you need to do is prorate the cost of the motor that was sold divided by the total cost of the total motor multiplied by this total tax written down value, and you get your figure. Are we good? We bought 2 cars that cost 6,000. We sold one of the cars, and the car that we sold cost 3,000 naira. Now all you need to do is divide this one, prorate it, share this particular tax written value between the 2 of them.
Ma, please, I have a question. This
Please
tax, okay, this tax written down value. Please, can you go back to the Excel sheet?
Okay.
So you were saying this tax written down value, that's the 749.03. You said
Yes.
it comprises of the 2 motor vehicle, that is 2 motor vehicle that is remaining.
Yes.
But in the question, you know that they bought the one the like our calculation, is it not both for the one they bought in 2020 and the one they bought in 2022?
Thank you for that question. I was expecting somebody to ask me. The one that they bought in 2020, Otita, it has finished. Number of useful life 4 years. Otipe in this year. That's why we have this 3 at the back. The 30 naira that is at the back is for those 3 that they first bought. That's why in this old annual allowance, we do not have anything here because we don't even have any motor vehicle left.
Okay.
Do you get it?
Okay.
But so, if you have that kind of situation that you have old and you have new motor vehicle, that will bring us to the second way of calculating this thing, which is going to be very, very stressful. I will not lie to you. So what you now do is to calculate solely for that sold motor vehicle the tax written down value. How do you do that? Let me copy this, or let me write here, or copy, paste. So what you now do, cost of motor vehicle, cost of motor sold. Sorry, I sold remain G. Cost of motor sold 3 million. 10. The cost of motor sold 3 million. Initial allowance 50%, abi 1.5. We are going to be putting minus here because we need the total value. The first annual allowance is going to be what? That will be 1.5 divided by 4. Orí mi ò gbé maths. $375. So we have 375,000. We are putting minus in front. How many years did this motor use? They bought it in which year? Let me go and check the question. They bought it July 2022. So it's going to use 2023 year of assessment, 2024, and 2025. That's 3 years, Abi. So second annual allowance. Who is calling me? It's going to be the same. Who is this? Bye. Basio. Guys, a moment, please. Okay. So I think I've copied this. Paste. We paste here too because we are going for 3 years. Third annual allowance. So now, as at the time that we sold it, as at the time that we sold it, the tax written down value is now going to be this. Tax written down value. So this one that we have here is because of approximation error. It's approximation error. This one, like this 39 that we remove, affected it. It affected it. That's why we have 374 here, and we have 375. That's why I was saying here that we should use 750. But I know that if I use 750 now, people start asking me, where did I get 750 from? That's why I decided to use what was there. So, do you guys get it? This method, you calculate it as if you are doing capital allowance for this motor alone. But this method, you're only prorating what is here. You shall get the same thing, except if there's approximation error like this. Do you get? Are we good? Awa, yeah, you speak.
Ma, please, I want to ask something. If in exam condition, we did not work it to this extent,
okay,
like we did not deduct that 10 naira of 18, is it that they are going to fail us, or they are going to mark us wrong?
If I understand your question, right? If it depends on the number of years that is given in your question. This question is a very long one. That's why we have a solution that is this long. Some questions will be just 2 years, some will be just 1 year. Do you get? So it's because we did a question that is up to the number of years of the asset. If your question is not up to 4 years, you don't need to remove 10 naira. But if your question is up to 4 years, it's compulsory that you remove 10 naira. It shows that you know what you are doing. Do you get?
Yes, ma. So we are going to remove 10 naira from all the assets if our question is if the number of the years is up to 4 years.
Yes. It's not 4 years fixed, so for example, industrial building is 10 years. If you reach 10 years, you remove 10 naira for industrial building too. But if you do not reach 10 years, you leave it like that. You stop where you are supposed to stop.
Okay, ma.
I hope I did not confuse you.
Yes, ma. Please, can you go back to the question? I want to screenshot.
This is the question. So, we actually took the question. We just need to write it out. We have calculated our tax written down value, Abi. So now, let me do it here. The tax written down value at sales proceed. How much did they sell the assets that they sold of motor sold equals to how much did they sell it? 1.2 million. 1,200,000. So do we have a balancing charge or balancing allowance, my people?
Balancing charge.
But why is it a balancing charge?
Because the proceeds from the sale is greater than the written down value.
Thank you very much. Let me see this person that responded. Who responded to me? Who responded? Who answered the question?
I did.
Oh, similarly. That's nice. Your voice sounds like a presenter's voice. Like, you know, those resonating voice that when they take the mic, all the hall will just fall silent. Okay. So let's complete our work. That was his voice distracted me. So balancing charge equals to sales proceed minus tax written down value of motor. See how I'm writing it one by one, see if you guys are kindergarten. Well, it's intentional. If I give you assignment now, don't say that you don't know how we check. You need to come. Sales proceed is 1,200,000 minus, let's use the one, which one should we use? Should we use 375? Let's use 375. 1, 2, 3. So our answer equals to, what is the answer? 1,200 minus 375. 825. 825,000. Wàhálà yín ti pọ̀ jù. Let me write it equals to here. Okay. So now, àti ìparí iṣẹ́ o, this is supposed to be our balancing chart, normal. But we need to check the total capital allowance that we have collected on this asset. Is it more than this or less than this? Remember that if it's less than this, we need to restrict it. So what we'll do here is to do what? Let us sum our total capital allowance up. Okay, luckily for us, it's more than this. So this will be a balancing charge. I don't know if I should write that out for people that would want to check this thing out.
Yes.
Okay. 1125. Okay. Total capital allowance claimed on assets sold is 1,125,000. So no restriction of balancing charge because the capital allowance claimed is greater than profits. I think that explains it. So it means that this balancing charge relates to what year of assessment? Then consider this balancing charge relates to 2025 year of assessment. Why? That is when the asset was sold, because that was when the asset was sold. Are we good? So that
Ma,
is it. So we have finished our question.
Now, I
I
have a question.
of this
Okay.
Ma, please go back to the Excel.
Hey, how many people do I want to respond to now? Go back to the
Go to
Excel.
the Excel first.
Which where should I go back to?
ma,
Down.
part of
Abi up.
the restriction part. I don't understand.
Okay. So when you were explaining the written part of capital allowance, when you were explaining types of capital allowance, I explained balancing allowance. And balancing allowance is divided into two. Balancing charge and balancing adjustment, sorry. Balancing adjustment is divided into balancing charge and balancing allowance. In this case, we have balancing charge, just like Temidade has explained. Balancing charge because sales proceed is greater than tax written down value. This is an additional profit. This is a profit for us. It is not an allowance. It is a profit that is going to be charged by the tax authority. But there's a caveat, and the caveat says that it says that the profit that they will charge tax on when we have a balancing charge must not exceed the total number of what? It must not exceed the total amount of capital allowance that has been claimed on the assets. It must not exceed the total what capital allowance that has been claimed on the asset. But on this particular asset, the capital allowance is greater. So we'll leave the profit as it is. Assuming this figure is like 2 million now, we are going to restrict it to this amount.
Okay. Okay.
Okay, so Wilfred, you can ask your question.
Okay, my question is, sorry, go back to the Excel. My question is, this total capital allowance claim on the asset. Does it mean that if you want to calculate the total capital allowance, you exclude the initial allowance? Is it that it's only the annual allowance that you check the total amount? Because from what I see here, using that 1125, it's only the annual allowance that you calculate.
That's true, that's true. Sorry, I totally forgot the initial allowance.
Oh,
If we have initial allowance, how much would it be? 2 and 6, right?
yes, plus 15.
So that's it. Our decision will remain the same actually. Our decision will still remain the same. Okay, so are we good?
My phone want to off. Oh.
There's nothing we can even do again because we cannot even do another question. You can see the number of time that we use in solving just one question. But guys, I need to tell you this. The question that we just solved, though, is advanced tax question. I will not lie. I just need you guys to understand capital allowance. That's why I used it for you guys. But your own might not be this long.
This question.
Yeah?
We question
Wilfred,
come on that higher purchase.
No, I'm saying that this capital allowance to get as it be.
Actually, you just need to practice. You need to practice. But the reason why I put this advanced tax question there is because I need you guys to understand how complex capital allowance can be and be ready for it. I think last diet or before last diet, they surprised them by bringing forth things that are in professional courses. And there's no way skills people can know professional courses now because they were not taught. Do you get? So that's why I'm going for possibilities. It can be hard. When it's hard, you know what to do. Do you get? So this one that we just did is advanced tax. And the thing is that it took us how many hours to finish it? This is just
that is my problem because this thing can consume the whole of your 3 hours.
I'm telling you, and this is just an additional information in question 1. It is not a whole question. It's not a single question. Oh. It is only an additional information in question 1. So it means that they are still going to compute CIT. If their capital allowance is wrong, their CIT will never be correct. And that's what you guys will also do. But your own capital allowance cannot be this complex. I'm just preparing you for possibility in case you see something like this, you know what to do and you not be confused.
Okay.
So your capital allowance should be simpler than this, which is why I'm giving you an assignment. I will re-upload this thing now. So I think you guys should be able to try question 2. I think I saw question 2 or so. Yes. Assignment is question 2. Let me see. Assignment is question 2. Let me see what I can do because I want everybody to try this thing. You guys should pay for your material. I'm not supposed to be screenshotting question for you. It's not allowed. I'm just concerned that people that have not paid will not have access to the thing. And it's unfair on those that have paid self because these things require time. I have to sit down and look for questions for you guys and everything. So it's not like sorry. Let me
Thank you, ma.
really paste. It's not even paste. But let's paste it on WhatsApp. Maybe it will paste it on WhatsApp. Wait, Joe. What's okay. So that's it. Even though this WhatsApp will implicate me, I'm not supposed to do this. You guys are supposed to buy your material and go and check it there. Okay. So please, what if reverse is the case and the capital allowance is less than the sales proceeds? That will be balancing allowance. And balancing allowance will be added to your total capital allowance. When we do CIT, you see the format of how it's supposed to be done. Right? So that is your assignment, guys. Try the assignment. If you have any question, let me know. We are going to be starting with the assignment in the next class. And I hope by next class we'll conclude capital allowance. If we can do 2 questions, that particular question and higher purchase next class, we close capital allowance and move to the next topic. Do you guys get? So please read up, pay for your material, get the material. I made the material as explanatory as I can. I did my best to make sure that you guys will not get confused when you're reading it. So please read up. Wilfred, do you still have question? Who else is waiting up? And
Oh, I don't have question again.
Zainab, what do you want to say?
Ma? Yeah, ma, please can you explain this part where you said this balancing charge relates to 2025 year of assessment? Because that was when the asset was sold.
So this balancing charge, I'm sorry. The balancing charge relates to 2021 year of assessment because we sold it in 2021 year of assessment. So when you want to compute tax for 2021 year of assessment, that's when you will consider this balancing charge.
Okay.
Do you get it?
Yes, ma'am. Thank you.
It was sold. The vehicle was sold in December 2024. I remember that if you go back to our computation here, December 2024 falls in this period. Abi? That's why it relates to that period.
Okay.
All right. I hope we are good.
Thank
Practice,
you.
so you guys should practice. I see you. That will be next Friday. Read. All right. Let me stop this recording.